Hey guys, Vet from ITG. I'm going to do a quick weekly preview, basically drawing supply demand levels, fib levels, just to give us an idea of where we're going. And I'm going to do it on NQ's futures, Nasdaq futures. So we're going to start out from a daily chart, and I've already drawn some of these, so I'm just gonna highlight them as we go. The first is a retracement, a fib retracement post-COVID lows to the high all-time highs, and that was November. It's going to play going to see a little skew because I'm gonna draw this year from the high of 2022, which really starts in December, and I'm not going to use a November high. So there is going to be a little bit of ambiguity between the two. But there's the first fib that we draw. The second fib is, and I got them colored a little bit different. I'm just using purple for this year. And it's really not the high of the year, but when we go and look at Nasdaq, it doesn't change a whole bunch if you use January 5th ES and Nasdaq December 27th. But there's a pretty big difference between December 27th and you go all the way back to the 23rd of November, an entire month's worth. And there's a lot of auction theory that occurred during this time. So here's the level, and then I work to draw a trend line. So the first trend line would be obviously COVID low to the October lows of this year on the 13th. The next trend line would be the high of what we're using, say 2022 on down. It used to go to here. Now we moved it down to the 17th of August. And that's really the 50, almost the half back, 50% retracement off of from the October lows. Again, we had no idea that was a 50% retracement because we didn't have these lows at the time. The next trend line I draw, in all likelihood, would be from here to here. I want to see the most recent swing high, August, on down to see, and this is, let's see if that's the one. Yep. Okay, so that's the one we just broke this last week. And you're dialing in, and then I'll get to supply and demand. So then we start dialing in a little bit more. And so now, realistically, is there any other trend lines? Well, you want to look at the lows. Again, the lows coming off from the COVID lows, but then you want to see where we are on the lows in this capacity. And so the next trend line would go from the October lows to the swing low that we just made, 2 weeks ago on Friday the 4th. And that becomes important. So now I'm like, okay, well, so this is how we draw supply and demand. And there's an art to it, and it doesn't always exist. And new traders, you're going to get this, you're going to get it messed up. Okay, first of all, start at a higher time frame. And you see this as HTF, higher time frame, a supply zone. And the reason why it is if you go and look in here, you don't know it's supply until it's supply. Okay. What transpired right here is that we had a trend up. We moved up from 6th of September, the 7th, the 8th, the 9th, the 10th, which was Monday. We gapped open on not the 10th, the 12th. We gapped open, and then price immediately reversed. Now, we know that price reversed off this point, but we didn't have this point on our chart at the time. So what you can see is when you see price action reverse back lower, that becomes a supply zone. So what I look for is when price immediately drops and it falls much further, then you want to go and you want to look, and I want to see if I can get the previous candle. So a down red candle and a sharp downward move. I'm going to look for the previous green candle, and I'm going to use the entire wick to draw that supply zone on a high time frame. Okay, so there'd be another one if I went right here. Let's see if I can do it with everybody in here. You see how price dropped here substantially? So I'd go right here, and I would draw green to green. And so from a higher time frame, this green candle, this wick is where algorithm said we're not going any higher. Now, we already knew. We didn't know this point existed because we didn't have that trend line. Now we've got that trend line. So this becomes an even higher time frame supply zone. And what's crazy is you see that that 0.5 fib, and that's again 2022 highs down to 22 lows is the purple. So not only is there did the market reverse, again, look at the trend. Where's the trend? The trend's up, and then we stopped and we retraced back lower. Now, so then it goes to what was a previous supply. Well, where did we stop a downtrend? We stopped a downtrend and we started an uptrend. So then I would look at this candle in this vicinity, this green candle, and then this red candle. I don't want 11,774 to 11,060. I don't want a 700 shaded gray area. That does not exist. This is actually one, which means in all likelihood, if we get through this supply and this, if we get through this trend line and this supply, this is going to be the next formidable target, if that makes sense. So we drew this one. So then I go back to this last week, and this last week, what do we have? The market was moving lower, and then we came higher, and then we had a sharp down on Wednesday, and then Thursday we had the big CPI. So if I go look at this, it becomes a demand zone here. It also becomes a demand zone of when we bounced off the October lows. This was the close. The next day was, during this period, the next day was lower than the close. This is where we closed. And then the next day is where we spiked up. So somewhere in this vicinity, carrying it forward, this becomes a high frequency or a higher time frame demand zone as well. But really, we're looking at this last period. Now, the reason why it's tighter than all the way up here, one, it doesn't do us a whole bunch of good to have a huge width on the demand zone. So what I do is I typically go down to the 4-hour time frame. And when you get to the 4-hour time frame, what do? We came down. We had a lower wick, lower red wick, green, green, green. And this is all pre-market, right? This is 02, 03, 04. This is leading up to CPI, and then the CPI data allowed it to launch. We could actually go up to this next level and widen the supply zone a little bit to encompass the previous day's time frame, but that's 10 o'clock the next morning. So somewhere in that vicinity, I like to keep them as tight as I can. It gives me a better mindset. Now, here's the other thing I go and do. So we've got, let me go back to the day, just so everybody can see, exactly where we are. So we got this higher time frame. Okay, so we've got this one and we got a trend line off of this one. We got this one and we have a continuation trend line. This is where I drew the trend line from the August highs. And so we have this trend line. Make sure it's on top. There you go. So the other thing I want to do is I want to create a fib. Just for me, is I want to create a fib level from the top, not the August highs. We already have that one. That should be this one. From the August high down to the October lows. And that's these fib levels over here to the right. Okay, this is where it gets kind of confusing, and adding too much is going to detract from some of you's understanding. So we now have 3 fib levels. We have COVID low to 2021 highs. We have the December 27, let's call it 22 high down to the October lows, and then we have the August highs down to October lows. Well, if I'm putting in a supply here, okay, and we've created a supply off of this wick, this trend line, this wick, but this candle is my supply zone on a higher time frame. This is also a higher time frame supply zone, and will likely carry much further into the future. And we carry it until it's broken. There used to be a supply here that I had on the charts this last week, but we use this one now because this becomes the most recent. So then the other one goes to a fib level in here, and this fib level is going to go from the top of the supply zone back to underneath the supply zone. You could technically possibly go to this one, but I just do this, and the only thing I bring up on those two fib levels is I bring up the 50 which is right here, okay, on the same level. We bring up the 50 and I bring up the 618. So when I bring these up and you carry numbers forward, and I got to look left, right? Okay, here's 50 from all-time lows, or the COVID lows. Okay, no factor right now. But if you draw it across, it's 11,698. Let's say 11,7, and then you got these levels, which is the 382 from August high to the lows, and then the 0.5 from the most recent September 13th to the October lows. So we've got three levels that are sitting right around the 700, 725, 730. So 700 to 735, this is going to be important in NQ, and I mean, it's right in the middle of, Friday's candle. Okay, then the next one goes up to the 236 off the COVID lows. I'm sorry, the 236 off of the 2022 high, 2022 low. You've got the 618, which is 1203 off of September to October. And then you got the 0.5, which is August to October. So somewhere in this vicinity, guys, we're going to probably have the market potentially stall. And this is what I'm projecting for us to get to tomorrow, tonight, somewhere in this zone by Tuesday. And we could see price action get back down here and move back up into this range. We could see price continuation up into this range. But in this range is where I would be looking for a potential shorter term supply zone to form, where we would green wick, green wick, green wick, and then all of a sudden have a red wick and start working down. Now, that said, so my immediate targets would be somewhere between 11,942 on NQ up to the 12,112 or 12,111. We love that 11 handle, right? So somewhere in that 60, 70 point range, this is where I would look for the Nasdaq to potentially fall or start to tire out and reverse. Now, if we reversed back lower tonight, tomorrow, and we get down below this level, then we might find some support and then push through and maybe go all the way up through this level. Let me move this one to next Friday. I always like to have a vertical line for the next expiration so that I can realistically not be talking about, oh, we're going to go to here because this is where it intersects. No, I want to know where the line intersects these key points. So, I mean, again, this is, people, somebody was joking the other day. You got circles? Hell yeah, I got circles. Here's a pretty important circle for this week. Because this is where three lines intersect. Downward trend line from August highs, yearly high to August high. The 618 from the August highs to yearly lows. And Friday, November 18th, MOPEX. Okay, I can tell y'all right now, there are a lot of firms that have that level. That 12,497, basically 12.5, there are a lot of institutions that have that level on their chart. Well, if they got it on their chart, I need it on my chart. Pretty important. So now we've got a higher time frame on a daily. We have a higher time frame supply zone above us, and we have a target above us. We have a target inside there. So then I go and let's look at where the weekly VWAP is. Okay, so the weekly VWAP is down here, this fuchsia line, okay, maroon, whatever you want to call it. But it's back down here at 11,253. No factor right now. Then I look at the 200-day moving average. So the 200-day moving average comes in, and it's right freaking in the middle of this high time frame supply zone. That's more confluence. That's the market telling me, yeah, you got that right, because we got something big right here, and we got something big right here. Now, is the 200-day going to drop that far in the next few days? And the answer is no, it's not. Okay? And the 200 might actually come underneath this supply zone over the next few weeks. And if it does, it's going to be even harder to hit into this supply zone to get a rejection. Okay. Then I look at the weekly. Let's see if I can do this. Let me take off the weeklies. I'm going to take off the conservative. These are the baseline ranges we're working on right now. Not for you guys at the moment, but it will be down the road. But this is supply and demand. So you start to see supply and demand base, and we find a little bit of balance. Everybody knows that the last few weeks we haven't had a lot of balance. We've had a lot of chop. But I like to see that we have candlestick, higher time frame, supply zone around key fib levels, right? The 382 right here, and then around some supply and demand zones that we have auto generated. This would be demand, this would be supply. So if that makes sense. So we have a lot of that, and then what I do is I go in and I put in where my PVIs are for the week. And if you look at it, this becomes the weekly. And so now this is how I pretty much go into the week with, okay, here's my chart. This is what I'm thinking. I've got my higher time frame supply demand zones. As soon as the futures open, in a few minutes, I'll be able to put in my PWG levels on a weekly basis. But I've got right now a baseline modified PVI, which is just above the higher time frame demand zone down here. And I've got two key levels right here that we're going to be eyeing this week around 12:031 on down to 11:50, 11:40. And so we're going to see which one of these it's going to play out. Are we going to get up to this and reverse? Or are we going to fall back down below this level and find some, maybe even a 50% retracement of this bar? Are we going to come down to this 236? Are we going to work and we're going to find another demand or supply here, demand here? Are we going to find a level somewhere in this 11,475, 480 that we don't know about? Again, keep in mind, we're not even looking at the market profile yet. So that's kind of how we do it. I'm going to do more videos later on. I got to get ready for the futures. All right, guys. Later. Bye.